8B was very well done. An average of 70% on a question at the end of the paper is exceptional. So what you're asked to do is incorporate some information from 8A and prepare the general journal entry required to record the stock adjustments arising from the information provided. You are not required to provide a narration. So in the previous question you had to fill in a stock card, and you may have had different figures to what the solution here has, but the main thing is you carry forward your answers. So the correct answer was there was an opening entry which was a purchase of 210 units at $7.70. Then we recorded all the sales in one entry, 200 units sold, which left a balance of 10. Then we were left with a stock loss of 1 unit at $770, which left 9. And then finally, we did a stock write-down of 9 units for $90 each to get them down to $680. Now, your figures may differ, probably due to either not product costing the delivery expense. That would be the most likely issue. What we need to remember though is what we've been asked to do. So this question says prepare the general journal entry. So what does that mean we need to do? Well, we've got 4 entries to choose from. Which ones need to go in the general journal? So the first one was a purchase of stock on credit. So that would actually go in the purchases journal. We don't need to do that one here. The next one was a series of sales. Now they all had invoice numbers, so they would have been recorded in our credit sales journal, so they don't need to go in the general journal. It's actually going to be the next 2 transactions. So the first one is a stock loss and the second one is a stock write-down. Both of those will need to go in the general journal, so that's where we're going to start. Now, by the time we got to the first entry, which was a stock loss, we had 210 units at $770 for a total of $161,700. And then we got down by selling 200 units, we were left with 10 units at $770 for a balance of $7,700. Now we didn't need to recreate the stock control ledger, but just to explain what it would have looked like, it would have had a debit balance of $770. The next thing that happened was we recorded a stock loss. So what just happened? We recorded an expense. Why is a stock loss an expense? You don't need to answer that here, but it does help you get your debits and credits right. It's a stock loss because there's an outflow of economic benefits. We've lost stock from our inventory. There'll be a decrease in assets called stock control. And lastly, there'll be a decrease in owner's equity. So what we're going to do is get this stock control ledger, it's at $7,700, it's actually got to go down by $6,900 or get down to $6,930. So to do that, we create an expense called stock loss, and expenses go up on the debit side, and that becomes a credit in the stock control account. So that's the entry we're going to need to make. Just to prove that we've done that right, we should end up with a balance of 6,930. Now if we were to balance out this stock control ledger, we can see that we'd actually end up carrying forward a balance of 6,930. So clearly we've got that right. So what did that look like in our general journal? Well, we did a debit to stock loss of $770 and we did a credit to stock control of $770. We don't need to use the subsidiary ledger columns. They're only for debtors and creditors. The next entry we did was we've got stock with a balance of 6,930 in total, and then we're going to do a write down for $810 to leave a final balance of 6,120. So to do that, we've got to remember what a stock write down is. That is also an expense. Again, we're not asked to answer that, but it does help us figure out our debits and credits. Why is that an expense? So there's an outflow of economic benefits, as in there's a decrease in the value of stock. It's going to decrease an asset, again it'll be stock control, and overall it will decrease owner's equity. So in this case, that balance of 6,930 in stock control after the stock loss is not correct. We need to decrease it by another $810 in the form of a stock write down. Now we said that's an expense, so when an expense goes up, that would be a debit, and therefore it's going to be a credit in the stock control account. Now to prove we've got that right, if we go forward and balance that, we should get a balance of 6,120. So if we balance that stock ledger there, carry forward the balance based on the numbers we have, we will actually get a balance of 6,120. So we're actually correct with our numbers here. What did we have to do in the general journal? We had to do a debit to stock write down, which was the expense, and we did a credit to the stock control account. In both entries, remember, it didn't ask for a narration. Now if you did one, you weren't penalized, but why would you do one? It would just take up time and space. So remember to read the question. Looking at the mark breakdown, quite straightforward. 1 mark for the debit to stock loss, 1 to the credit to stock control. one to stock write-down and one to the other credit in stock control. These do need to go on separately. We can't do one overall credit to stock control. These are different transactions with different memo numbers, so they need to go in separately in the general journal. Looking at the mark breakdown, 17% of students got 0, and at the top end, very pleasingly, 52% of students were able to get 4 out of 4. Looking at the average, it was 2.8. The examiner's comments were, remember the entries in the stock card in question 8A should have been used here, so your answer might be different to the one I had. As long as you carried forward what you had in your stock card from 8A, you were able to get 4 marks. And lastly, the examiner noted that this question was generally answered well. It had a high average, which is particularly pleasing given that it is at the end of the paper.